Jayant Acharya, Joint Managing Director and CEO of JSW Steel, joins us now. Jayant, good morning. Thank you for joining us. Before we talk about numbers, let's talk about the macro environment. Lots happening on the macro front. One is a slowdown in China, followed by aggressive stimulus measures. And now, with Trump in power, there is a lot of uncertainty on the quantum of tariff on China. How do you assess these macro factors?
China has taken some steps internally to stimulate their economy. And we hear that they would be taking more steps to stimulate the domestic part of their economy more, and that should be positive for the steel market as well. China's steel production has reduced by close to 2% in the last year. We are also expecting that there will be a drop in production in this year, and if the domestic production improves or stabilizes, that will reduce the exports emanating out of China, which is again a positive for the world at large. But that's something which needs to be monitored. It has not happened in the last year. Last year, the exports were their highest. So therefore, this needs to be watched very closely. On the Indian side, the macros are very positive. I think the GDP growth outlook at 6.4% is very positive. The steel demand growth for 9 months at 11.2% is again very positive. We expect to end the year with a 14 million ton incremental steel demand in India, and we would expect to touch about 150 million tons for FY25.
Right. Jayant, should Trump's policies and Chinese tariffs materialize, do you see China shifting its focus towards India? And if yes, what measures do you expect the government to then undertake to support the steel industry?
So we have already seen increased imports into the world. As I said, China exported a lot, and India has seen the net imports double in the last 9 months of this financial year. We have already taken up the matter, and the Indian Steel Association has already initiated a trade investigation, and DGTR is investigating. They have initiated the case, both for safeguard and anti-dumping. The process is on. The responses from the stakeholders were to be received by 22nd of Jan. So it will be in process, and we do expect to hear from them sometime in the first half of February. We are basically looking for a level playing field. And since India doesn't have a protection and the rest of the world is putting up trade measures everywhere, it is necessary for India to look at a level playing field and put in appropriate trade measures.
Shifting focus to numbers now, Q3 numbers were good. With EBITDA being above estimates, do you expect the trend to continue and the volume growth to sustain in Q4?
Yes, so we had a very strong operational performance. The production numbers were at 7 million ton plus. It was aided by BPSL production moving up sequentially. It was also the JVML production which started in the month of December, and that has also played partly into this quarter. We have seen very strong sales numbers aided by strong Indian operation sales at the highest ever numbers, growth of 12% YOY. Both on console sales and Indian operation sales. We will see higher volumes in Q4 on the back of JVML ramping up the blast furnace. So we would see Q4 volumes to be better. It's a seasonally stronger quarter from a demand perspective, and that we would be able to feed our volumes into that demand. We are also seeing that the Capex in India will pick up because it has been slow in the past a few months till November. We expect the Capex to pick up now towards back-ended for the year here. That would improve the overall steel demand in India. We are expecting in JSW our cost to go down, and imports are now likely to moderate. We are already seeing that moderation now with expected trade measures coming in place. So that should stabilize prices. So it will be a positive quarter from a volume point of view, absolute EBITDA point of view, and margin point of view.
Sure. And the 27 million ton volume target for FY25, does that still stay? And now that we're at the fag end of the fiscal, what is your volume growth guidance for FY26? You think 8 to 10% will be a fair estimate to work with?
The growth will be very good in quarter four. The volumes will be good. The absolute EBITDA will be good. The cost will support the margins, and I'm seeing stability in prices will support the margins. Whether the margins will improve is something which I think we are looking to, and there are reasons to believe it will, but that is something which we need to see. Your questions on FY26, I think we won't be able to give you a guidance on FY26 right now, but we see that from an India perspective, the Capex focus will continue. We will see some trend in consumption improving. From a JSW perspective, we are seeing new mines getting added to our captive mines, which would get operationalized in this coming year. We would see the ramp up of the new facility coming in place, which will also lower cost, improve volumes. Again, that will be good from a volume standpoint as well as a absolute EBITDA standpoint. So we should see a better year ahead. There will be no election disruptions, and that should be good for the country at large.
Along with steel, coking and iron ore prices have also declined. How do you see the raw material prices moving, and consequently rupees 7,866 ton in Q3? Where do you see spreads headed in the coming quarters?
Yeah, so we don't give a guidance on the EBITDA per ton, but as you said rightly, the coking coal prices have moderated. Last quarter, we did see a moderation in our cost on coking coal. The iron ore prices have just come down in the month of January, and I think we will see that going into our cost, and that should be positive for us on a cost perspective. We are expecting that there will be another drop in iron ore prices soon, and that would also be positive. So raw material prices would be softer. From a margin point of view, as I said, we will not be able to guide on per ton or on a margin perspective, but I give you a feel of what we are looking at on a quarter four basis and positive for FY26.
Okay. Right. And Jayant, are JSW Steel's expansion plans on track? Are you on track to achieve that 50 MTPA capacity by FY31?
So as of now, we are on track. I think our expansion in Dolvi Phase 3 has already begun. With the expansion of this phase and the expansion augmentation of one of our blast furnaces in Vijayanagar, we would be adding capacities, and we would be 43.5 million tons of total capacity, including international operations. Major part of our capacity of 42 million will be in India. We expect we are on track on the 50 million tons, which we would like to achieve by the end of this decade. Having said that, I think it is very important for a level playing field, because the margins which are required to play back, to invest, to reinvest back into Capex is essential from a steel producer point of view. And that's why the level playing field is critical, trade measures are critical. And that would certainly support our ability to expand capacities in India. And the way India is growing, I think it is very important for us to be self-reliant. The demand will be very, very strong in India in the coming 7 years. And it is important that as a country, we build capacities.
Jayant, appreciate your time. So glad you could join us. What